Good morning, everyone, and welcome to the European crossover webinar. And we'll just edit this out here. And we'd seen the euro come back yesterday with a very nice move, but we saw it take a tumble back in. We're just going to do a quick flyby of just some news. Obviously, what's impacting is we're getting all kinds of movement here. One of the things that came out this morning, good growth, and we just fly through this real quickly. The Eurozone business activity picked a bit, extending a bit from last month, a solid growth, but a global trade war kept optimism in check and suggests the pace may not be maintained, a survey showed. We did get a purchasing managers index come in at 54.5 from the 54.3. The trade war has had some effects. Policies have been implemented so far by the U.S. hitting the Eurozone are pretty small, but worries and protectionism escalating in the future could have an impact on business. Now, just to go over this real quickly, one of the reasons why the dollar was doing much better earlier this morning in European trading, the dollar rose broadly. Obviously, that's a different case right now. We're seeing the dollar pair back in at this moment. You can see that pulling back. But it says the dollar rose broadly on Wednesday's concerns grew that President Trump may soon ramp up a trade war with Beijing by imposing tariffs on more Chinese imports. We've been talking about that. The dollar index, which measures against a basket of currencies, was up 0.2 at 95.66, but we since pulled back down here to 95.40. And also references the talk with crisis in Turkey. Now, I don't want to spend too much time at all on the news, but I do want to hit some key points that we're looking at. We'll get to that. Strong German services points to robust growth in the third quarter. So we are seeing the euro come back. One of the reasons we're seeing the euro come back is now we have rolled into the December bunds, but you can see here, prices continue to move lower. Obviously, yields going higher, and that's certainly going to go and give a boost to the euro. I was mentioning that to the guys and gals in the ForexAnalytix room earlier. Say, hey, look, new lows now in bunds, and obviously we're getting that extra kick here in the euro at this point. We've already seen a run up to the 78% here on the rally back here in the euro. Looking here with the bunds, trying to hold those lows here at this price. A moment. But this said German services growth reached a 6-month high in August as firms created jobs at the fastest pace in 11 years, as the survey showed on Wednesday, suggesting a domestically driven upswing will continue into the third quarter. So good German news. Separately, the Construction Association's ZDP on Wednesday raised its forecast for revenue growth in 2018, pointing to surging demand for real estate, higher state spending on construction, and lower borrowing costs. This is all supportive for the euro, and certainly we're seeing the euro bounce back. Now, the only thing is that we are getting a bit of mixed information or mixed data in here. We'll take a quick look here. As we come into the States, the one we do have Canadian trade balance data, but obviously the key is going to be Bank of Canada rate decision coming in at 10 a.m. Eastern. Let's go on and get into the analysis. Like I said, once we get into a good groove as to hitting all the key variables, try and factor in daily charts and move this out of the way. And the short-term analysis, once we get all that in a groove, we'll be able to measure things out appropriately. We'll take a look at the bias chart. Yesterday's bias chart support for the euro, we had a 15.34. The low was 15.30. And in the Asian session, let's take a look here. We actually came in. That's where our bias chart support was right here at the 38%. In the Asian session, we got up as high as, right here, 1608.5, and our bias chart resistance was at 1607. So pretty good, not bad at all. But like I said, let's go and take a look at what's happening with the euro. Once we came back from the holiday, we're kind of all over the place right now with this euro. And bit of a mixed bag in here. Now we've seen us defend on these pullbacks in here and hold into this 1532 or 1530-ish area right there. That held up. We didn't make new lows. We're coming back, but obviously a little area right here in the daily. There's 1605. It's key for them to get a close above 1605 on the daily to go and get this and stop the bleeding here at 1605. So that's going to be the key on the daily close at this point, 1605 to on a very short-term basis, just to quell this downside. So let's go in and mark this off for 1605 on a daily close. That's going to be key. If we can get a daily close above this. We'll just jump right into the analysis quickly. Let's go and take a look here with the 2-hour chart. Now, we're just kind of like all over the place right now as we come back from holiday, and markets are trying to figure out which way they really want to go here. Now, you can see here we made it right up to the 38%, and we got turned down. Saw a pretty good sell-off this morning. We've also had some Italian news. They're indicating that they're going to go on and respect the budget and try and keep things in line. That's giving a little bit of a bid to the euro. Also, we've also, as we mentioned here, seen these lower prices here on the bunds. They've been under pressure. We take a look at it. We actually had to come here to a 2-hour to get a little bit closer look. But when we look at it on a 15-minute, they're still under pressure. But the key area is going to be 59.98 on the bunds. But they're trying to place a hold right there. Let's go on once again. Let's move right here into the euro. A lot of back and forth, and right now the market is still what we consider, at least on a very short-term basis, pretty much in a range here. When we look here for the support, that support did hold well. That was 1532, I believe, or 1534 was on. We got as low as 1530. Now we're looking for key support today. It's going to be this close on a 2-hour bar. We get below that, this can open the door for further downside momentum. You can see that's right there. 1556. That's going to be our support here. You could break below this. I think once you get past this area here, that will open the door for more downside. But it's important that they defend this 1556 right here on the 2-hour close. So we're actually going to kick up our support. We obviously were lower this morning, and we talked about this as a previous key day area for us to hold, which we did. They've tested that, so we're going to come back here. That's going to be our support for today here on the intraday basis on the euro. But this market, I'll tell you what, the way it's trading intraday, it just feels like it just doesn't have a real good sense of footing here at this point. We're just up and down like a yo-yo at this point. It looks like at this, I'll give you an example here. I'll move this into a 15-minute chart. You can see here when they did come up here to 1608, you can see that here. I had that marked off, but I've got several things across on this 15-minute chart. But the key thing is, look how we come back from yesterday. We get this strong rally, and then we turn around and give it practically almost all the way back. And then we turn around and rally almost all the way back up here, although we're starting to shed just a little bit. But my point is that this appears as if there's no real sense of conviction. Let me put it to you that way. Or the trading's light. One of the things that Pipsar would like to say, used to say, is that when they come back from holiday, quite often the first week, there's a lot of meetings, and then the trading really starts to get some real traction and some real volume, probably like the week after. And I think this market's trying to figure out what it wants to do if it's not moving up and then moving down. Obviously, when we get these concerns with trade issues and the concern that the administration may levy another $200 billion on Chinese goods, tariffs on Chinese goods, we're just back and forth all over the place right now. So unless you're short-term trading, boy, you're at the mercy of this market right now. I don't think we're going to see the full effects of where this market really wants to go to until we start, going towards the end of the week. And this is evidence of that, is that we fell down here pretty hard. Then we turn around and come back. Then we fall almost all the way back down again. And then we come right back. So no real conviction. One of the things that is moving this market, I believe, is obviously going to be the bunds. So you need to go and keep that on your dashboard, at least what the price is on the bunds. Now, on the upside, well, let's take a look here. We had that 1608 as our resistance. This market could maybe trigger some stops, and you got to be careful. This is the one area that if you're trading, I'd be very leery of either selling on a breakout or buying on a dip unless you catch it right near a key critical high or low. But as far as breaking the new lows, that's what you're going to have to be worried about. If as far as resistance for today comes in, this is still a key area, this 1608. But can we push beyond that? I think that there's a possibility if bunds make a push to that 59.98, and you look right here, there's 60.13 on the December bunds. We've rolled into the December bunds. I think that there's a chance if we do, your key resistance is going to come in right there at 16. Let's go and move this. This is actually going to be the reactionary point. 1637. That's your key resistance right there. 1637. This here. That's going to be the real resistance for today. And we can go up there and goose some stops, but it's going to be where the road meets the road is going to be 1637. If we get beyond that, then we'll get some traction. So resistance now moves up to 37. And don't forget, if we can get a daily close above 1605, that'll quell this downside momentum. But we would need a daily close above 1605. Moving on, let's go on and get on to cable. That's had its woes too, as it's succumbed to the action that we've seen here with, going back and forth with the dollar. Looked like we were going to come out of the woods, and we did have that area right there. We had our support at 2809 yesterday. I think the low was 2812. We've taken that out, and now we've reclaimed it at this point. So when we look here for support, it's going to be right there in this low, right there, the same level, 2809. Nothing's changed. You can actually move this a little bit lower right here, and we're looking at the 2-hour chart of defending this close right there, which is 27.96, right there, 27.96 and a half. Think of that basically at this point almost like your pivot. If you get below that 27.97, then that really opens the door for them to go much lower. I know that right now the talk has been that the concerns with this crash out of Brexit, that there's still a lot of pricing that could go south on this market. We did see that Merkel's allies that came across the headline this morning that they're in favor of a stronger ties with Britain, and that's probably going to go on and provide some support. But for right now, we're going to go and list this support as 27.97 right here. So move this here. And you can see where that's coming from right there, 27.97. You get past that, and that's really going to turn things south. And looking on the upside on the cable, did make it up to this 28.72 area here. It actually almost like a little bit of a double top here. I saw this yesterday. On a very short-term basis. You can see right there that 28.71. This is when they ran out of gas. I thought it was just going to be a positive. We may work higher, but obviously the dollar had its strength going in here into the European session. We saw this cable come under some pressure. That being said, the news we're seeing out of Germany, just one moment. with their talk that they want to be supportive of stronger ties with the cable, may on a short-term basis give us a little bit of support here. And we're certainly seeing this with almost looks like a little bit of a hammer bottom. So for those that are aggressive, you can see this level coming right in here. 28, there's 28.10 again. Anywhere between 14 and 10, you look for the market to be probably well defended for those that are going to be looking for the bullish side here. Now, resistance is just has to be right there. 28.69. If we can get past that, then we'll go on and turn things around, I think. But it's going to take a 2-hour close above 28.70 to get things moving back up here. So let's saw here. Obviously, still very bearish. And I think that this week, at least these first couple of days back, are going to be a little bit tricky to go on and trade. I saw one of the guys mentioning, it's been fatiguing having to fight this dollar. And I tell you what, it's just all over the place. By the time you think it's going to look like it's going to, roll over, it goes and reasserts itself. But once again, we're a slave to the headlines for right now. Let's go and move into the Aussie. Once we get established in the show, we'll be able to spend more time, whether it's on the daily analysis or we may bypass a couple of markets. One of them could be, maybe crude, so we can spend a little bit more time on our daily analysis here in the hour that we have. Let's go and take a look here with the Aussie. Now, the Aussie dipped to new lows just a little while ago. We actually had made a run here in the Asian session. Looked like we might even get up here. I thought we might even be able to push it up in here to 38%. We were making a push. I think we had some resistance around 30, I mentioned, and I thought they might even make it up here. But they quickly lost steam and made new lows once again on the angst with the issues with China. We had our support at 71.57 here. We're going to go on and keep that. We're going to keep it. Actually, it was 71.50. So, and the low, let's take a look here. No, that was our support for yesterday going into today. Because on our bias chart, it goes from the current day into the very next trading day. So we had 71.50, but it seems it's oversold. There's no doubt about that. But obviously, when you're looking at the momentum, certainly that's going to go on and point to make it easier for prices to just continue to slide. Nothing's really changed as far as the issue that goes on with China, and the Aussie dollar is traded as a prop more often than not as a liquid proxy for China. Now, looking as far as resistance, well, we had 72.40 from yesterday, but this market 72.41. But this market is probably going to have a little bit of a tough time trying to get beyond there. I think if you look in here, we're going to lower this just a bit. This is going to be the key area right here. Now, we'd have to get above 72.23. Once again, the same thing with the cable, or in the sense the euro, as far as to quell the downside. So we need a 2-hour close above 72.23. We're going to go and list that and lower this as our resistance. And he moves back there. The market's probably going to go and step in front and challenge that. Let's go and move into the Kiwi now. Euro's starting to slide back just a little bit after trying to make a punch to 116. And unlike the Aussie, the Kiwi's cousin or sister, however you want to go and look at it, same thing, just new lows here. We got 65.30. I think on here we marked this down here. Oh, we put 65.25. Okay, 65.25. We'll keep the 65.25. That was our support. Look, we were actually looking, to go as low as 65 cents. I thought, well, that's probably I mean, not necessarily exaggerating it, but probably a little bit of a stretch. I don't know if the market would drop 50 cents or 50 ticks. So that's 50 pips, I should say. So that's why we went 65.25. It played into that, but we'll stay with the 65.25. On the upside, let's move this here. Still a little bit lower there. We're going right here with the technicals. You can see that coming right across. $66.35. We got to get above $66.35 to quell this downside. Same thing, because the momentum is just continues to go lower, and we've made new lows. So if we made new lows, if we're able to go in and reclaim $66.35 on a 2-hour close, that will get people to go and start to think about, well, you know what? Now I need to go and cover on any dips back. So we've got 66.35. That's going to go on and remain the same. We'll go and move into the dollar CAD. Big news today, Bank of Canada rate decision. Let's take a look here. We already talked about this as we had broken this trend line. One of the things that we discussed is the market would start to look for any dips to go in and buy. Well, we're pushing even higher, much higher. I thought that initially we'd get up to, well, we come up to this 32.06. We'll take a look at this on a little bit longer basis. I generally don't look at 2-hour charts. 4-hour charts. So I like to focus more on the 2-hour charts. But to give us a little bit of perspective, we'll go on and pull this up and take a view quickly on the 4-hour chart. And you can see this zone here, right here. You can see how this market came down, almost coming down to 32.06 for support, rallied back up off that, tested, got a little bit of a rally, about 200 pips, and then turns around. And once they get past it, it was just down, down, down she goes. And now we're back up to this area here. So it's going to take a little bit to get us beyond this 32.06. You can see this being a very key area. Now, resistance. Well, if the Bank of Canada were to be a bit soft or dovish in the rhetoric, certainly we could go on and take a push. That resistance is going to come in right there at 32.44. Don't necessarily see that, but you never know. So 32.44 would be our bias chart resistance in light of this potential Bank of Canada rate decision in case we do see some action. Certainly this thing is bullish now. Support now, well, we're just going to go right here with the levels. There's support right there. 31.23. Now look, if the Bank of Canada were to raise hikes, raise rates, we might just go through this like a knife through butter, and that key would be 30.87. But on a short-term basis, that area is going to be bounced. But we're actually going to look right there, just below that, 31.15. Right here. Right there. That'll allow them to goose a few stops past this area, but that 31.15, that'll be an area would work essentially like a magnet. Would also be above this breakout, and the risk would be back down to this 30.87. So not too far away. 31.15 for support. And let's take a look here with the dollar Swissy. This is a key area, and we almost made it up there. I think we had that marked off as 97.75. We sure did. And key area, You know, as I told you before, is this used to be, I used to be able to look at this as a leader for the dollar, and it certainly is the one that uh, showed the dollar out of the woods. But as I mentioned before, is for the last 3 months, the dollar Swiss has pretty much done its own thing. Um, so we did get a rally back, but even on the run back here, as the dollar strengthened, um, it hasn't given us any indication, even from yesterday. Uh, so resistance is going to still stay the same, 97.75. No changes there. And we're trading in a fairly tight band. Support, really no change there. It's going to be 97.10, 97.11. You see right there. No changes right here on the dollar Swiss. And we'll move into the cash dollar index. Now, this is interesting. Now, yesterday we had our bias chart resistance. What was down? Oh, we haven't got to the dollar yen. Well, we'll touch the dollar yen quickly. We talked about the significance here in the dollar yen of 11.36. We had resistance at 11.44. It's all about the daily close. If we get a daily close here above 11.36, because that'll open the door once again back to the upside. Nothing's just changed. 11.36, and we're just not even that far away. We're only 20 pips above it. We've been back and forth here, and someone was mentioning, boy, this thing is a hard one to trade and hard to figure out what this thing wants to do. But we did get that daily close above 11.36. See right here, and keeping the upside. If we're to go and push higher, and once again, we got a mixed bag with the dollar. The key resistance is going to be 12.11. That would be the case. Now, can we punch up higher? We can punch up towards 11.95. They may run out of gas, but the key resistance, if we move, if the dollar makes another extended move, really this dollar yen is trading on its own, doing its own thing. We'll take a look here on the 2-hour, but on a daily, it really opens the door for the 12.11. Now, looking here on the 2-hour chart, 11.66, you can see has been the key pivot. Above it, things start moving higher if we can get a sustained close, and the same thing on the downside. On a short-term basis, this is it, but we have to really be realistic as if this dollar yen breaks higher, what are they going to? It's going to be 12.11. It's way above the market to a certain extent, but it's going to be that key area here. So let's update this for a little bit longer view on that 12.11. Certainly, he's got the upside momentum after getting a close above 11.36. But once again, this is where the market want to go and target. If we hit stops, this is eventually where they want to go to, is 12.11. On the downside, we're going to go and keep it the same as we were already right here at 10.87. Right there. No changes here, 10.87. And for right now, we're just in a range here with the dollar yen. We're going to move in now to the Dixie cash dollar index. This one has been very interesting. Support that we had here, we had 95.28. This is actually where the market pretty much stopped. When you look at it, I've talked about this before. What's back? $95.28 said key breakout area. That's a key breakout area on the daily, which got the market, going. And we actually went to that area in Asia, and we turned around and flipped right back off of that 95.28. I'll show that to you here. The significance of that 95.28. You see, that's exactly where they went to. That was our support. Well, this key we had is resistance, but the support meant for it to hold on a daily right there. And then we were at 28, and that's right where we went to 28. And then and this was in Asia, and then the market turned around and just started going straight up. Now we've turned around and given a decent part of that back. But you can see the significance of that 95.28. 95.28 was that breakout area, which opened the door for eventually move all the way up to 96.99. Move this out of the way. So where are we going here with the cash dollar index? This one has been tricky. We made it up here. Here was our resistance here yesterday. Remember, 95.71. We had that set up as our resistance. The market made it up. I think they make it up to 95.75. We slid back, held that 95.28. There's that purple line. That purple line designates where our key close is, and you can see that actually held the market basically to the tick. In this case, we've turned around and rebounded. Now we had a nice little, depending on how you look at it, a nice little, I wouldn't call that a shooting star, but it's maybe a little bit high for a gravestone doji, but essentially that was it. And the market rolled over and spent most of the day in the late US session, early Asian session, just going south before turning around and ramping right back up. And now here we are with another more in tune gravestone doji, certainly open the door for a little bit downside momentum. What happens here? That's what I'm saying. It's a bit of a mixed bag right now. That 95.50 is a pretty key level. But in order for right now, for this market to get bullish now, we really would have to get above 95.58 on a 2-hour close. We're not even that far away. But if we can get above 95.58, that'll probably, that would at this point open up the door to test some upside stops. How far that would take us to, whether we can make it up here, my thought would be is this would be the intraday trigger right here. You get above 95.58 on a 2-hour close, I don't think people are going to stand in the way. I don't think they're going to rush to the door to buy as many dollars, but I think they'll be covering their dollar positions. Once again, a 2-hour close above 95.58. So let's go and mark this off. That 28's key. And let's come back here. Well, we're trading, as I said before, in a very tight range. So let's go on and pick this up here. There's your resistance. Support on the downside. If the dollar index decides it wants to go and break, and certainly it looks like it's getting tired up here, and then it could, and when it does break, if it does break, probably pretty good move down here. We'd be looking at, we can actually put a fib here if that would be the case. Let's go and take a look at it. Probably a little bit early to do that, but if we break, what would be some targets we'd be looking at if this dollar index starts to fold over? For starters, down here in the lower 95s. Anybody that's bullish at dollar, you know, that looks like we're going to break out and slide back. Okay, now everything's back on keel again. Now we start to slide back again. My thinking is, once again, 95.58 is going to work as a pivot on a 2-hour close. So any moves back here, anyone that's bearish the dollar is going to use these opportunities to go in and sell against that. And if they're wrong, the risk isn't too much. So I think the dollar will have a little bit of a tough time. I think we're going to have to generate some kind of big headline or something to really get this to push higher. I think the market is set up, or to a certain extent, the market is very long dollars position-wise, according to the CFTC. So the longer we hang around here, if we don't get some traction to the upside, you may start to see some of those bulls wane a bit. And so I don't think anything's going to happen immediately, but we may just hang around here for the next day or so. And if we can't get any upside momentum, then we may start to go and slide. That's, I think, the way you have to go and take a look at it. I think it's a little bit tough right now as traders come back from holiday to step in and they're ready to start taking those positions. I think this market, people are saying, you know, let me think about it. Let me see what's really going on here with the dollar and how is it going to go and react. I mean, we certainly saw last week the dollar work higher when the thought was, okay, the administration is going to, you know, lock on or snap on an extra $200 tariffs on Chinese goods. The market kind of came back from holiday, kind of forgetting about that, and all of a sudden today now it's back on the front burner. What we might see is once again a jump up here on some headline and then turn around and slide back down. But this will be the key pivot for today, 95.58 on the downside. The support then, I think this market is going to play these ranges Support would be right there, 95.05. That's going to be our support. I think if we break lower, people won't get in the way of it. They'll let it go. And 95.28, remember, that's key. That was that daily level. So it's going to be right here, 95.05. If we get some momentum beyond this 28, then I don't think they're going to stop at 16. They'll make the move for 05. Now let's move on to gold. Well, this also worked out pretty well here. We talked about 1194 being key on a daily close. That's why we had the asterisks and the 1195 and pretty much held in there. There was a stretch that it could have got down to 92, but this pretty much just caught the lows right there. So when I look at the gold, I will say this about the gold. It's, even though it broke early yesterday, it's actually holding up fairly well against the dollar. The moves, gyrations you're seeing in the dollar. Gold's trading in a very tight range to a certain extent, although I'm looking on a very, very short-term basis. Seems to be consolidating running here. Now, if we see some kind of headline-generated news, that may allow a dip down here, maybe to even take out the 91. But I think that you're going to find some good buying as we would come down here. Now, that being said, where's the support? We have to go. I think we have to go and allow for that and give it some room, because you don't want to be caught with your pants down. If we do get, the dollar makes one last push on a headline, so we're going to actually give it a little bit more room than we did yesterday. Yesterday, the 95.94 worked out very well, practically right there where the market ran out of gas. But we're going to give a little bit more room in case we start to see this market rotate a little bit lower, and then it's the victim of a headline. And that could very well take place. So we're going to actually move this a little bit lower. And we have 91.60. We're actually going to go with 11.91 on the downside, so you know your risk is. I tell you what, we'll keep that 94 there, because that would be key. Because if we made that move down here, you'd want to, on a daily close, have it recapture 11.94. That way, if you were to pick it up, let's say we saw that and you picked it up and the market was moving higher off of those lows, let's say the dollar fades on the headline news, begins to fade back after rallying, and you're along the gold market, let's say 11.92, 11.93, and you see that for the daily close, it closes like at 11.96, then you know you're going to have some upside, a little bit of a tailwind or undertone bid. But that will be key. But I want to make this so we don't be caught with our pants down for 11.91, and just be cautious. Now, looking on the upside, we had the 12.04. We're going to go in and adjust this lower here also. And the resistance is going to be right there. Well, that's not much, but it's going to be 12.03. So it's going to move this down to 12.03. And there's a support 11.903, 11.91. There we go. And once again, like I said, I think that we can stretch down here. And the good thing, I mean, I wouldn't say the good thing, but 11.91 could slide all the way to 88. But I think this whole area between 88 and 91, 92 would you're going to see some hands step in and be willing to go and pick up the gold at this point. We saw new lower levels here in the spider, but the market's not reacting to the downside anymore on that news. It's starting to lose its effect, which means to me is that even though the market's under pressure, it's not continuing to break down. So overall, we're holding up fairly well here. We could be breaking a lot lower, and this is going to be the key. That's what I'm saying, this 91. I think that's going to be very key. We could make a stab below it, but the key would be to close above that area on a 2 hour. And if you can get daily close And then once again, we're just factoring in case we see this dip in gold. At least you're ready for something like that and make a determination how you want to go on and trade that. Let's go and move into the bonds. Well, the bonds did get past this pivot. So we're seeing higher interest rates, and you would think that this would be supportive for the dollar. And to a certain extent, it is. Problem is that we're seeing the bonds lower. Now we've rolled over into the December, so it looks like we have this big old gap, but that's the gap between pull this back between the September and December bonds. But pulling this back and looking here on a 2-hour, see if we can get this a little bit closer here. You can see this is a key area right here, 59.98. So the thinking would be if we do go in and break here down to 59.98, that's going to continue to be supportive of the euro. But if we can make a hold here, let's say the euro rallies up, let's say 30, 40 pips, probably an area where you probably see the euro maybe take a little bit of a pause, a breather. But you definitely want to keep your eyes fixed here on the bonds to give you a general idea of how far or where the direction will lead with the euro. I mean, as I said, I mentioned to the guys and gals in the chat room, hey, new lows in the bonds, and the euro was much lower and obviously provided a nice undertone bid for the euro. But we've already had pretty decent fall here in the bonds. I would look, we may not see it today, but any moves just below 160, we've got support at 59.98 is going to be key. We'll actually mark that, although we're looking at the bonds right now. Right there is going to be key for the bonds. They actually held that yesterday, which is this 42.28. I think it looks like they dipped about one tick below that. That's going to be key for right now. And you can see even here, right there, it's all 42.28. So we're just going to lower this, not too far away, but 42.28. My apologies, made it 44.28. Broke that pivot at 44.07. Support now, 43.28. Bunds coming off their lows right now. And the upside is down here. Well, certainly the 44.07 is having some trouble with that pivot, but that's not the resistance. Look, we can go above the pivot, and there'll be some more right in here. If you look here, 44.16, but the real resistance is going to come in there. It's a ways away, but it's going to come in there just right there, which is actually, we'll call it 44.31. But you can see here, now the bonds, I always look at them on the 4-hour chart, but you can see the significance of this pivot, that 44.07. Moving into the bonds, as we just mentioned, we have rolled into the December bonds. Support, as I mentioned before, is going to be 59.98. That would be resistance. It's a long ways off, but the bills can certainly come back. That would be resistance. Seems like a long ways off, but they are very oversold. They come back and they're going to snap back in a heartbeat. That would be resistance right here in the bonds, 60.36. One thing bullish about the bonds is if you look at rates, the rates of it itself, that would be the bullish part. Going in here to the SPOOs, let's go and save this. We had the 28.94, and it actually even got below that. Actually made it all the way down to 28.85 3/4. I was thinking yesterday, it almost feels like, but not quite, almost like a little bit of a rounded top, but maybe trying to see a pattern when there really isn't a pattern. Resistance actually is going to be right there. You have to wonder at some point where the concerns with China begin to weigh. So far, they haven't, but you can see this level coming right there. Comes in 28.98, coming right across. Make the case for a little bit higher 99, but I would go with right there, 28.98. For right now, it's going to be right there, 28.82. Which would coincide with the 23% back. I mean, well, actually, if you adjust it over here to these new highs. But it's going to be still 28.82. We're going to move into the NASDAQ. You can see the resistance coming in right there, which is 76.36. Almost similar to the way the S&P is set up. Called 76.37. Support right there. $75.74. This support here on the NASDAQ worked out very well, but I think the thing which you have to have your heads up on is at some point where we start to, we've had an unbelievable, I really don't expect it to fall apart, let's say in the S&Ps or the NASDAQ, but you want to start to see where momentum starts to change and the concern that we may have with what's happening with China. Where we see that kind of reaction, I think the market is waiting for something like that, where we see a good move, and it doesn't mean the market will fall completely apart, but we see a pretty good reaction. You can start to see that right here where the market fell apart. And then before you knew it, then you saw the momentum really catch up. Not that we expected this market to turn on, but I think that that's what you have to go and focus on is that news right there. Now let's go and move into the DAX. Which has really come under quite some pressure. Now I think we had our resistance right here, or I should say support, the 149. Went right through that. Obviously concerns once again. Just if it's not issues with, I think I saw where Ivan the K was remarking on something what Jim Cramer said about the Eurozone hangover. And if it's not Italy, it's the concerns with Eurozone banks because of the Turkish crisis or issues ongoing with the administration, with trade issues. When it looked like Europe was kind of let off the hook about a month ago, things have kind of changed a little bit since then. So obviously, certainly we're weighing on the DAX. Now, I will mention this is that we saw some great German growth numbers. So probably a little bit stretched here, and we're at a very key level here at 12,105 with the DAX. We're in support right now. Coming right there, 12,117. But we have certainly seen, we've been under some kind of pressure here. But that would be the support here, on a short-term basis, 12,117. We do have a little bit of a hammer bottom. The 23% comes in at 12,197. And that would actually allow this punch into this little gap. And wouldn't be that far away from where it had that 78% on the way back down. Obviously, initially it held and then turned around, the wheels fell off the caboose. I like that area there, that 12,197, because the pressure still remains there. And we'll find ourselves with a little bit more extra time. We're going to go here now into crude oil. We certainly saw a pretty good little slide in the crude. There was a lot of concerns about what might happen. This level worked out very, very well here with the crude, but we had the support very, very close, and certainly it kept on falling back. How far back? We'll take a look at the fib right now. See if we can establish some confluence. We're right here. We'll find some support here at the 38%. So come in right there, just below that, which is going to be 68.54. 68.54, right there. Those are traded crude. Once it gets some momentum, Don't get in the way. Right there. 69.60. Would you be just take out those highs? 69.60. And there's the bias chart for today. We see this run back up here in the euro. Now we're easing back just a little bit. Well, guess what? We're easing back a little bit. Well, because you're seeing this rally back up here in the bunds. The bunds had actually made new lows. And at the time, when we're making these new lows, we got all the way down here, to about 68.08, 60.08. Look, we've rallied 14 ticks. That's actually taken a little bit of a upside pressure off of the euro, but not a whole lot. I think that once again, I think the jury's still out. And I think you have to be careful here. When the way we've faded back in the dollar, if we saw a nice run, look like, okay, now we're going to start to work lower. This was all overdone. We turn around and come all the way right, almost all the way right back. Certainly just about did it here in the euro on the way down. And now we're kind of easing back. I think this market is going to be on a very short-term basis, just kind of going back and forth. We're seeing a little bit of this Jekyll and Hyde action right here. We rally, then we lose it, hold that 95.28. We rally almost all the way back. Now we start to lose it again. This market is kind of like not as unsure of what it wants to do at this point. And I think because of that, it's very susceptible to some stops. And so I think that if you get a headline on the administration in regards to this China tariff business, you can quickly gun some stops. So if you're going to go and trade with very, I would think with very tight stops. And I would think that you probably want to wait at least over the next 24 to 48 hours to assess where we're going to start to see some momentum. Because you're not really seeing here when you run up, you turn on and give it up, you run back up, now you start to slide back down again. I think it's made it a little bit tough. I think you're going to have to come in at key levels. Right now with the cable, it's going to be this 27.96, 27.97. Any breaks below that really will open the door for the downside. Been some talk over the weekend that the downside isn't really priced in. Well, we did get some news from Merkel's allies stating they want to have strong ties with Britain. So that's going to provide at least a little bit of a undertone bid for right now. We also, technically, we have a little bit of almost looks like a hammer right here on this 2-hour chart. So I think they'll try and step in and defend this or hold it. Once again, we get beyond 27.97, it'll certainly open the door for us to go lower here. And looking here with the euro, as I said, the key resistance where the rubber meets the road is going to be the 1637. We need to get a 2-hour close above 1637. Until then, we're just kind of at the mercy of these headlines that go just back and forth. Whether the headlines come out of Italy with their issues with the budget or issues with the administration and tariffs. Once again, like I said, I think we're susceptible to this headline risk. The real key news of today is going to be the Bank of Canada rate decision. We did break above this trend line. So really, technically speaking, any moves back down towards this 30.87 are certainly going to be defended, even if we see they take action and we see the Canadian dollar strengthen. This would still be an area where if people were playing it from the short side, they'd certainly step in and try and cover on a very quick basis and then reload. We'll see, but that's going to be the key news for today. But here's the bias chart once again. Dale should be coming up any second. And thanks for joining us here on the Morning Edge webinar.
Hi, Paulie. How are you?
I'm doing good, Dale. How you doing?
I'm doing good. Okay, so I just want to, let everyone know that if they were looking for European cross-dresser instead of crossover, that Steve Bulgy has a link for that, and he only does it only does it in private. Am I right, Stelios?
Yeah, he's the main star. Yeah.
Huh? Okay. All right. I knew his manager would know. Anyway, let's take a look at what's happening around here. Paulie doing a great job giving you guys critical areas for you to pay attention throughout the trading day. So let me take the screen. I have a couple of things that I'm considering here. Okay. So how are my trading warrior brothers and sisters? Everyone doing okay? Yeah, give me a Y if you are. Let me know you're live out there. So I'm trying to be patient for lower levels to buy the gold. I'm thinking around 1280. But there is a bit of a correlation between gold and the Aussie. And I would not be short Aussie. Maybe Aussie's going to turn before the gold, but this is pretty classic 1, 2, 3. Sometimes, though, on the third drive, you can get a fractal where, even though this is the third drive, you could have a 3-drive pattern within the third. So, if you need to do something, you just put a small piece on, knowing that we could retest the lows and diverge again. The 1 hour, it's pretty glaring. Look at the divergence down here on this candle compared to there, and the 4 hours looking the same. Very tight little 3-drive wedge probably developing between 140 and 240, which tells you if we could start getting through 220, there might be 100 pips to the upside on that. Okay. Something else that, I'm just looking at, I caught last week. There's an expression, stick with what got you to the dance. So last week was going through a bit of a drawdown on some negative news out of the UK on the short euro pound up here. I was shorting it in the 50-60 range right here. I won't see that, and then they gave the UK a 1-month extension and the pound exploded. First, there was bad news and it went up to here to 91. Pretty good break, 160 pip break. So I see this as a shorting opportunity with stops over the high. You don't want to fight it if that happens. And there's potential that we have at least this from here. And Greg is talking about the same thing on the week ahead video. I don't know if we have any pips, but you could have a quality longer term. I'm still bullish this pair, but we could get a quick little ABC, this being A and this being A, B, C for B, and get a C to the downside. I'm really an amateur technician. Okay. Hiya, Craig. How are you? Marius, Martin. And I'm trying to be patient with the gold. I know it's up a little bit today. I'd really like to, there are a couple of reasons that I'd like to see another $10, $13 lower in gold. Maybe I won't get it. I'd really like to see him flush out the longs here that bought the first dip thinking, we were on our way to 1240 or so. So I'd like to see around 1180. And another reason is there are some targets up about from 1235 to 1260. This from 1160 was $55. So, I'm just doing a little addition and subtraction. If you could add, subtract, multiply, and divide, you can trade. So get your flashcards out. I think, we get down to 1180 and we have a similar move. That's going to take you to 1235. If we get a fib extension of this, that's how you could get 1260, 1270 on gold. Perhaps we need silver too, which is really the weakness, no divergence. To trade a little bit down, I saw targets as low as 1360. Peter Brandt, I think it was. but I'd like to see another lower 2 in silver to set up the buy in gold around the 1180 level. I'm not sure if we have any patterns in play looking to do it or not. Everyone with me? You don't have to agree with my analysis. I'm just sharing my thoughts and the rationale for it. Okay, because this is intelligence gathering here. So I'm using what little intelligence I have to share it with you guys every morning. Okay, I just want to touch on the indexes again. You know, people are probably so frustrated trying to topic this thing. I know I've done it about 10 million times, but you know, yesterday I was showing the return line, the throw over in the Dow, which it was respecting all day yesterday. As you could tell, you know, we tried it a couple times here. The Dow is living back within the wedge. So this, I'm sure, who's still short after this? Hard to short. Could we rally again? This is a nice little pivot point here. But what changed is before yesterday, the S&Ps were way above that, this line. You know, they came in like, you know, here. All right. So we held it on Friday, rallied, made a lower high, and now S&Ps as well are living back in the wedge. So be careful. All it's going to take is one bad day in Amazon for some of you think about it. Most of the FANG leadership is shot. Yeah, we're getting bear market rallies in Netflix, and Facebook is a broken stock. Apple is a king, you know, but way stretched out, probably almost as stretched out as Amazon. And Google, I saw a chart by Helene Miser. She's a great technician, and she showed Google breaking down yesterday. So part of my intelligence gathering. So, you know, this is how I use ForexAnalytix, so that I don't become completely dependent upon guys whose work I respect. Is you formulate your own plan, okay, what you're thinking of doing, and then you go to the traffic light page, you know, and take a look at comparative views of the same instrument by Grega, right, by Andre, by Steve and Blake. And you'll find sometimes Blake has talked about that when there's confluence between different methods saying the same thing, they're usually pretty strong signals when everyone's in agreement. But that's how I do my intelligence gathering. I think it's important that you develop your own ideas, but be open to the potential that maybe you're not seeing everything. And when you go to guys that you respect and you're looking at their work, they may be able to save you some heartache. They may give you more conviction about what you're seeing yourself, and I think is a great way to use it. And the only way you'll know if you know it's a great tool for intelligence gathering is to sign up. So take a shot. I'll make the same offer I did before my vacation. If you don't think you get $1 worth, I'm going to mail a refund, postage due. You'll have to pay for the stamp. Okay. So that's what I'm looking for. You know, you guys stick around today if you're a GAN fan, or you know some of these legendary master traders from the 30s that did, you know, all kinds of mathematical formulas before we even had computers. Because Victor Zubarev is going to be with us. And Victor has a very deep knowledge of all of these. He's studied all of these, and Victor has prepared a nice presentation for us. And, you know, who knows? You know, I've never been able to wrap my head around GAN, but it doesn't mean that you as a trader may not find that it, you know, suits your personality. You know, GAN believed time was more important than price, you know, and I say it's not about the if, it's about the when. So that's time. So stick around for that interview. Great to be back with all of you. And at this time, I normally pass it on to Blake and see what Blake is thinking before we hand it over to Steve, and then that follows with the interview at the top of the hour.
Hey,
so, hey, buddy, how are you? Good.
You know, I'm a little irritated this morning. I got stopped out of the cable, and what looks to be a stop run too. It's so irritating. I'm having a hard time, and I mentioned this yesterday. I'm having a hard time identifying what to do with the dollar right now. I know the dollar's pretty confusing. I don't think there's any real good setups at the moment, but you can see the cable. We actually came below the 618 retracement. This is a pretty classic stop run. I mean, I should have known better that we'd come through here. Hold on, let me grab that. We come through here through the 618. Stop everybody out and sell, including myself, and then bounce. Now, is that it for the cable? I'm not sure. I actually shorted some euro pound. You were talking about it a little earlier. I shorted some euro pound on the idea that that might have been a stop run, but it's
a nice fib retrace in EG, like from last week.
I'll take a look at that here in a second, but I'm not convinced about the dollar. That's why I'm going to stay away from the dollar at the moment.
And the yen too. What do you do in the yen? Like, there's so many pairs right now that it looks to me like they could. I don't know where they're going to go. They could go either way.
Well, okay. So the dollar yen, if you read the analysis, the basic technical analysis from ForexAnalytix overnight, I called it the tail of the 2618. So and it's the same
in the box.
The box that I drew yesterday, but you'll notice that we retraced 618, stopped there. Yeah. We rallied and then retraced to 618, which we just shy of basically the 618 or just below the 50% retracement. But really, we're kind of stuck in this box, and like right now, like 10-year yields are hitting new lows right now. The dollar yen, the dollar yen still 10 pips off of its lows. Now it is rolling over a little bit, so maybe that sell off in yields will eventually weigh on the yen. But I don't know what to do with the dollar yen. We haven't seen risk off yet. If you look at the S&P, the S&P is still above that 28. 2880. Yeah, that's the breakout point, right? So as long as we're still above that 2880, can you get is it a convincing trade to be short risk? I don't know if it really is at this point in time. Now if we get below 2880, I think that does change things a little bit. I think you have to start being more conscientious of a potential risk off as we'd get that throw over that you often mention on the S&P, but that's still it's 8 points away. It could it could breach today. It's possible, but
you might have to have good reactions to catch this one, Blake. Look at what happened at the beginning of last year. That whole break was 5 days. It completed that whole decline from early in the year in stock indexes in about 5-6 trading days.
At the beginning of the year, you mean right here? Yeah. Beginning of the year this year. Yeah.
It was done in 3-4 days. So
it was fast. Yeah, it was fast. And I can't remember if there was a catalyst at that point or not. I'm trying to think if there really was, but
no one knew why. No one knew why back then.
But what do you do here? If there is, what do you press? What do you trade? And again, is it the dollar yen? Do you short the euro yen? Do you short the pound yen? Do you short the Aussie yen? Whoops, Aussie yen, Kiwi yen. Canadian yen. Or do you buy dollars? Is the dollar the right trade? And I don't know what the answer is, and that's why I'm struggling at this point to figure out the dollar. Now, technically, like, you look at the euro and you know why the euro stopped where it did. If you didn't figure that out this morning, we hit the channel resistance, so we stopped up at the 116 level. All right, so that's That's pretty easy. Okay, I know why the euro stopped where it did. But does that mean you should be shorting it here? Well, if the market rolls over, is the euro a good short? Maybe the dollar's a good long. Again, in my opinion, it's not clear at this time. And I look at some of these currencies, like you pointed, the Aussie. I mean, the Aussie made a new trend low here, and then we bounced off the lows. It's still 161% extension, or 127% extension of this. I think this is an August. Yeah, this is all the August move consolidation. 127% extension. So should you be getting, short the Aussie dollar? I don't know. Kiwis made a little false break here below these lows, and then we're bouncing. Do you short the Kiwi? I'm not really too sure. So we have to get better clues from the market to identify, what we should be doing. I was looking at Italian bond yields, or Italian bonds. Here's the 10-year bond market, and this is, everybody was worried about, Italian bonds last week. Well, look at the, bonds have really recovered. So, when you got the, Italian bond market recovering, that takes a lot of pressure off, the downside pressure off the euro. So it's like, okay, well, if you had the Italian bond market breaking down, that would be more of an easy, trade for me. I would say, oh, I'll just short the euro yen. You know what I mean? But the Italian bond markets, like I said, it's coming off of its lows. So it's taken the downside pressure off. So again, what do you do? And that is the question right now. There's emerging market currencies are feeling a lot of pressure right now. We're seeing like you can just take a look around it. Like here's the U.S. dollar, South African rand blasting higher. U.S. dollar, Mexican peso. We hit a 50% retracement this morning of this entire down move. We're pushing higher. U.S. Well, the Turkish lira isn't doing anything. It's actually kind of stationary at the moment, but still very well bid. It's not coming off of the highs. So again, this emerging market currency weakness that you're seeing. Here's the U.S. dollar CNH still holding up pretty well. Does that, spawn some risk aversion? And that's possible. It's possible, because that is a focal point of a lot of traders and investors right now is the emerging market currencies. And, are we heading into another, potential crisis there? One last thing I should mention before, I turn it over to Steve and Stelios is the Bank of Canada today. So the Bank of Canada, we have the interest rate decision. The market's expecting the BOC to keep on hold, but because of the inflation pressures that Canada has felt over the last couple of readings, we're looking for the Bank of Canada to signal that they're going to raise rates next meeting. So by the end of the year. Now, the question is, how hawkish are they going to sound today? Are they going to sound more hawkish, or is it going to be more of a dovish hike? And if it's a dovish hike, then we're going to plow right through this, probably this 132 level, which, if you notice, is the 618 retracement. Here, let me clean up this chart just a bit here. You can see we broke this down channel, broke through this resistance, and we're just kind of holding right now. Now, if the Bank of Canada signals that they are going to be raising rates, and they tend to be a little bit more hawkish, or if they are a little bit more hawkish, we could see 131 again in the US dollar Canadian. We can drop right back down to this, this channel breakout point, which would take us right here to 131. I think this would be possible. Now, do keep in mind that the market is waiting, a potential NAFTA agreement. And if there is a NAFTA agreement in principle, especially by Mexico and the US and Canada, then the risk is going to be of a stronger Canadian dollar, as the Bank of Canada is probably going to, take its foot off the brakes and start on an interest rate hike campaign. And that we have to see some sort of deal, NAFTA deal emerge. You know, these talks have been very promising, but these talks have been ongoing for so long now, and you know, even when you know, the Trump administration announced that there was going to be a deal with Mexico last week, it never transpired. It never came to fruition. That was more of a, and we talked about this last week. That was more of a, we needed a win. So we're going to announce something that really is not even going to happen. But you know, we wanted to take some of the pressure off of the Michael Cohen indictment and all that stuff. I firmly believe that's what that was at that point. And I didn't believe there was going to be a Mexico deal. But are they still, I say they, you know, are the NAFTA negotiators really still inching their way towards some sort of agreement? I believe I have to believe that they're going to do something soon. It's going to be, you know, in the best interest for everyone, you know, involved to get some sort of NAFTA deal done. But when's that going to get done? But when it does, I think the dollar Canadian will fall. But you know, again, does it happen today, or you know, does it happen 2 months from now? Who knows? But the dollar Canadian, you got to watch it here. If they signal that you know, it's pretty much a done deal next meeting, and we're going to get a hike, and it sounds like the Bank of Canada is going to take the less conservative route and just talk about you know, that they have to start raising rates soon, then the dollar Canadian could give back some of these gains that we've seen over the last several trading sessions since last week. So we got to watch the Canadian careful. And I think if we break above these highs, above this 132, this 132 level, 132.05, then that will allow continued gains up towards 133. So we have to be very, very careful with the Canadian today during the Bank of Canada interest rate decision. I guess really fast before I turn it over to Steve is, you know, I have to also mention that and I don't typically take a look at these, but man, these cryptocurrencies really broke down here. You see the US dollar, or excuse me, the Bitcoin market slipped right to channel support. Ethereum broke below out of its triangle and broke to new trend lows. I was expecting a move towards you know, 240. You can see the analysis from earlier today on Ethereum. When we broke that triangle, the Ethereum broke lower out of the 4-hour triangle, which targeted new trend lows near 240. And we got as low as 250, but I don't think you're out of the woods yet with Ethereum. Ethereum looks like we're going to break down towards the 223 level. Now, I guess one last thing, and Steve will probably chime in here in a bit. We've got a blog coming out about precious metals, and I'm not going to go into too much detail today, but or right at this moment in time. But I'll tell you, gold has been holding up a lot better than silver. Silver hit a new trend low, and inside of this down channel. But the one thing that I'd be looking at now is if silver actually ends up turning and breaking this channel resistance. Because if it breaks channel resistance, then that would actually be a signal for me to start looking at gold longs again. And because gold has held up really well, I think this shakeout from Asia a couple of weeks back is it was a true low near term. So I think it could be traded against. Even though I'm not long gold at the moment, I am really strongly considering picking up some gold soon. Once again, because I did play it on the long side, coming through this channel, out of this channel, and I'm thinking about buying it again here very shortly. Matter of fact, Steve Stelios, are you guys logged in?
I like your 61.8 there, Blake, at about 1180.58.
Hello, I'm here.
Gold,
hello.
if we can get down there. Hey,
yeah.
Hey guys, how you doing?
I'm very good, thank you.
Good. So we had some moves in the dollar. The dollar strengthened overnight. Obviously, we've pulled back a little bit. The euros bounced. The cables bounced off of the lows. Now, there's been some headlines regarding the UK, Stelios. I'm not sure if you saw them overnight, but really the last outstanding issue that they're looking to tackle in the Brexit negotiations, which is the big one right now, is the Irish border. But it looks like they've got most of the other boxes checked at this point.
Blake, you're absolutely right. And the more I hear the headlines and the more I read what people are saying, the more I just don't understand why the pound is still down here. Compared to the dollar, compared to euro and everything. And even Angela Merkel, I saw a headline like half an hour ago where she said something along the lines of an agreement has to be made. It's in the interest of everybody, or something like that. And this is all very constructive in my opinion. And I just don't understand what the markets are waiting for. Are they waiting for confirmation that the deal is done? Probably, because
I would assume that would be it. Is they're looking for a deal to be finished and final?
Yeah, I mean, just like you said, if you look at what Trump has said, he practically announced the deal with Mexico, and then nothing happened. So that might be the reason. If you had asked me, I would have thought that these headlines and these issues and just one main issue left, that should have pushed the pound higher. I mean, that really is worrying me a little bit. But I can only assume, like we said before, is that they're waiting for the deal to actually be done and to see what the details are.
Right. So that was all PR, guys, with Mexico last week.
I think it was
tangible. Okay.
No, I think it was. That it was the same day. It was actually a couple hours after. Michael Cohen,
turn
and Manafort, but we're both taken to jail. So I think it was a hey, we need to check box a win for the administration. Let's announce something that's crazy. It doesn't matter if it's true or untrue. It just it was taking the limelight off of the indictments, and I firmly believe it because it was just a couple hours later, and I'm like, and following that, Mexico is like, no, we don't. This is the first time we've heard of anything about this, and Canada's like, what? Us too. So I mean,
like you said it on the webinar, and you absolutely nailed it. It was absolutely right.
And then you had everybody that was shorting the U.S. dollar Mexican peso down here, thinking that a deal's going to be done, and I'm like, not so fast, guys. And obviously you can see where the peso's at now. As a result, I mean, we've gone from 1870 to 1970, which, that's a full, big figure move in the peso, which is a big move. Hopefully you weren't, or no one was stuck, on the receiving end of that, because that smelled very fishy to me. But anyway,
no, but I did buy Paul Manafort's karaoke machine.
Nice. Very nice. All right. Well, hey, I'm going to pass it over to Steve. Good morning, Steve. By the way, I'm going to be passing it over to you because we have Canadian trade data coming out, and I'm going to get ready to trade. So
good hunting, Blake.
Good luck, guys.
Thanks, Blake.
Good morning, Blake. And good luck. Good luck.
Thanks, guys.
Hey, Dave.
Hey, Steve. I just wanted to make sure people that came for Paulie. I just saw some messages. They were looking for the European cross-dresser session. I told them you would provide the link. All right, buddy.
Yeah. Sorry, I'm not on my main computer, so I don't have the link on this one. But I promise, I'm going to make it up to you.
All right, buddy.
Okay. So during the next few days, because I need to do some planning to format my computer, I will have to be broadcasting to my MacBook, because as it ends up, something is really messed up with GoToWebinar software and my Windows. So when GoToWebinar software is on, my connection to my computer just gets destroyed immediately. So uninstalling, reinstalling, and everything didn't do the trick. So formatting will have to be done, but there's a lot of software there and things, so I need to first put everything in order. So for the next few days, I'm going to be on my MacBook. So I would appreciate your help, Stelio, with questions, etc., since I don't have the luxury of having multiple screens on this one. Now, I know we talked a lot about NAFTA and some of the pairs here. So let me first go through the USD/MXN, because the USD/MXN played actually perfectly to what we had in mind here. This is exactly what we drew. When the pair was breaking higher, perhaps we get a rejection from here, another correction lower, and the move higher. Everything transpired in this exact way, but the pace was not the one I drew. Let me say here that I believe that there is also the potential that the USD/MXN is going to make it even higher, like towards perhaps if this failure from the 50% fee, but 1969 doesn't prove to be enough, perhaps we make it up to 20. Why? That's a confluence of a horizontal resistance area and the 61.8 of the move lower. Regardless, though, I would expect that this move, we will actually turn over, and we're going to start heading lower once again. So I just wanted to add that for this pair. Now let's go ahead and have a look at the metals. I've started adding to my gold position. I now have a 2/3 of a regular position size long. So I'm still positive about gold. I still think that there is a very decent chance and a very respectable reward to risk ratio that we're actually going to be moving higher from here. Let me, by the way, kill Skype, so you don't have to see the messages. Okay. I do think that there is a good potential that we're going to be higher once again. I would be looking for the 38.2 at 12:38. And as I said, and Blake said that we're going to get out a post about that. We will. But as I said yesterday, I would very much like to see a divergence with silver. So I was expecting that silver would be plunging lower because the price action was feeling very heavy. I mean, this is the recovery that we had, in essence, didn't change much for the bearish trend. But I wouldn't be surprised if I saw some kind of a capitulation here, especially if we stall here. We even have like very considerable RSI divergence. The previous low that we saw in silver brought RSI very close to 20. RSI is currently at 30. So this is what I would like to see. Now, yesterday, we talked about oil, and I very specifically said that it looks likely that we're going to be headed to new highs, but I think that the pullback is due. And we got that magnificent candle yesterday. This is a huge outside black candle, so that's a very, very bearish candle. Now, let me make it clear. First of all, we didn't end up closing on a daily closing basis above this 70 area. So, yesterday we were, much higher during the webinar, and taking into account that that most likely we would close above 70. I said that, a close above 70, definitely makes me bullish. And, depends on how high we push before we pull back. So let's say ideally we make it to 72.56 and then we pull back, then we can, expect 70 to act as support. But the issue is that, we had a very, very bullish day, which completely reversed and closed on the lows. So, this is a game changer because we never closed above the 70 resistance area. And actually, this is a very, very bearish candle. So, of course, I'm not excluding the possibility that, we will still, keep acting in a bullish manner. But I would definitely not want to see like momentum in this reversal. So yesterday's reversal candle was very bearish. Now, if we do see some momentum building up, I will then go back to my main scenario, because if you remember, as proved, that I'm not at all convinced, that we don't yet have at least one more leg lower, but 70 is the line for the line in the sand for me. If we actually make it above it, then I have to turn bullish again, because anyhow my medium to long-term bias is bullish. So this is a game changer. As I said, I'm expecting to see what's going to happen during the next couple of days. If we gain some momentum, I'm not only going to be looking for a retest of this horizontal support area, but I might be looking for another push lower. I might even sell it. But as I said, I need a little bit more price action. Definitely, yesterday's candle was a very bearish one, and one that you should not dismiss. So USD NOK, let's see how USD NOK reacts to that. Ideally, I would want to see one more move to the downside before higher for USD NOK. Obviously, if crude gets destroyed and we don't have some other news, that's not going to help in that scenario. And especially considering the fact that there is absolutely no question this is a bullish breakout on the USD CAD. It's not only the fact that we actually did break above this descending channel, it's that we did it with momentum. It's that the descending channel was clearly a formation that was by all interpretations it is corrective. So I think that any pullback towards the 131 area is probably a gift. And the next area of interest is up at 133. Now, there are a few indices that is very, very much worth looking at. First of all, yesterday we got rejected from this, in Nasdaq from this wedges resistance. Obviously, I need to see a lot more to get on board. For example, 7,470, which is like these previous highs. Also, the wedges support. That's the area I would want to see that the index break for me to start getting warm about the possibility that we've actually found the top. Until then, I'm very cautious. I mean, you can always see a few days like of weakness, but you need to see a lot more than that. But the index that's actually at a very, very critical stage is the DAX. I already spoke about that, I think, yesterday again. Why? Because there are only two levels left for DAX before we get a major long-term technical break. One of them is the one we're currently testing, this horizontal support area at 12,100. So you want to buy the DAX? This is probably a nice area to do it because you have a very clearly defined reward to risk ratio. But if this breaks, then there is nothing much. I mean, there's thin air until we actually reach 11,800. And as I said yesterday, 11,800 is the neckline of this huge, which, honestly speaking, if we break below it, I think that the bulls will have a very, very tough time getting out of the market unscathed. So DAX, I'm closely monitoring this area, and after that, 11,800 is the line in the sand, the bull bear line, as we like to call it in ForexAnalytix. Now, FXI is something that's also of interest because those are the large cap stocks in China. We had that bearish move lower, following what all indices more or less did. We then had a triangle. I was saying that I expect the triangle to break to the downside, expecting that we're going to see at least one more leg lower. But what interests me more is what has been happening since. And what is that? We're seeing some price action that looks like a consolidation. It's choppy. It looks corrective. You can define it as an expanding triangle. Perhaps it will become a diamond, a continuation diamond formation. RSI also shows more or less characteristics of a correction because RSI has been slowly recovering, but definitely isn't showing any, after having, as Dale would call it, after having a confirmed low down here at 20, when we found that low RSI was more or less at 20. So RSI has recovered since, but in all honesty, this chart, makes me think that, we're not done. We're not done pushing lower, and, with whatever that means for the rest of the indices. Now, let's have a look at the FTSE. FTSE, we said yesterday, a couple of different interpretations here. One of them is definitely that this is still corrective, and I think, I still think that there is a high chance that this move is corrective, barely holding this horizontal support area. But even if we make it a little bit lower, perhaps this proves to be a channel instead of a flat bottom triangle, right? So, if I wanted to short an index, FTSE wouldn't be my first priority. Probably, if I was looking to buy some indices, FTSE would be, high in my list of priorities. do I remember? Let me see. Because unfortunately, I'm on my MacBook and this is a small screen. Yeah, JPN 225. So one more thing I wanted to talk about. We've mentioned multiple times, and this is something that once again proves the choppiness of that the USD yen has been suffering from, because at the same time the Nikkei fails to do something. Nikkei is trapped between these ascending trend lines. How far back it dates? It dates all in 2016. But at the same time, we cannot also doubt the potency of this horizontal resistance area 23,000. We made an attempt last week to actually break above it, but it was a failed attempt. And we're back again in, you want to call it a range between 22,000 and 23,000. You want to call it a triangle. We're back again below it. So this is one of the reasons why I wouldn't be holding my breath expecting the USD yen to do something. I actually think that it's extremely tedious, and they actually think that it's probably loss of sleep and capital to try to trade it. I mean, once again, it's finding some resistance in this whole horizontal resistance area. You can see here at 111.50, but it has become so choppy. I mean, you really don't have any clear bias of what's happening here. So I don't really bother with it. I mean, until it starts doing something once again, I won't really bother. Going to the DXY, nice rebound, seems to be losing some momentum. I'm an advocate of perhaps one more push lower. I mean, I would want to see at least one more push lower for the DXY, even if it proves to be bullish in the medium term. In the short term, it feels like there is at least one more leg lower. So, but until that happens, who knows what's going to transpire? For example, let me explain what I mean. We might spend some time consolidating here and then move lower, or we might do something like this, like push a little bit lower, then push higher once again towards, let's say, 96, and then push lower. So until that happens, it's a little bit tricky trading, the vast majority of the dollar pairs, because, the dollar is currently trapped, and, these kind of corrective moves or consolidation moves can end up lasting, more days than you expect initially. They might, within whatever formation they build, they might produce some short-lived sharp moves that get people trapped, in either direction. So, I would be a little bit careful here. I mean, I think that, there are periods of time that you go all in. For example, I remember, when we had those nice trends in January, etc. I was finding myself, having a lot more positions than I usually have. Now I'm extremely light because it just came from vacation. But most importantly, because as I said, there are many things that, I haven't cleared up yet, the technical viewpoint. So, there's no reason to push your luck. But let's go through looking a few pairs that are on some, interesting levels. One of them is the pound kiwi. And why is that? Because the pound kiwi has been trapped in a symmetrical triangle for quite some earlier today. But, this attempt so far has failed. Given the fact that we entered the symmetrical triangle from the downside, I think it's a lot more fitting to break to the upside. So I would tend to believe a lot more a break to the upside than one to the downside. I would be more skeptical. So I have to say that, that might have been so far a false break, but I'm looking the possibility of a break higher, as a very likely one. So, I think this is something that, is worth perhaps trading. Pound, choppy. I just see it here retesting like a previous trend line after failing in this resistance area at 179.50. Obviously, pound kiwi looks a lot more likely to make a move to the upside before pound Aussie does. So if you're looking to be long one of those two pairs, I think that pound kiwi, technically speaking, much cleaner, and much trade with a proper reward to risk ratio, etc. Now let's have a look at the euros in the euro kiwi. Those have been quite strong. There's no question about it. Just look at euro kiwi, at Eurosi. It's consolidating right at the previous highs. There is no question about it. The move higher so far has been quite strong. If we do manage to clear this zone to the upside, the next target is the 127% extension of this corrective move lower at 164.40. Someone can even make the case here that this is an inverted head and shoulders formation that has been triggered. There are 2 points of view here. There are people that believe that head and shoulders patterns are clearly and purely reversal patterns, and I'm more of that opinion. But there are a lot of traders, respectable traders, that also view them as continuation patterns. I'm not so much of a believer of that, but anyhow, I'm just mentioning it since it's here. But
I've become one, Steve, because I used to be, some of us technicians get a little too anal, and we become technical analysts because we're so anal about everything. Why not be open and go, hey, I've seen it work as a continuation formation 100 times. Yeah, I guess it is a possibility. Huh?
From what I see, every single joke that you have today is kinky one way or another.
Yeah, what's wrong? What's wrong with me? What did my vacation do to me? Huh?
I don't know.
I had a lot of adventures. I didn't go to any place exotic, but I had a lot of adventures. Anyway, yeah, I've seen them work long enough not to fight it anymore, Steve. Because I used to debate people. I was on the purist Edwards and McGee technical analysis of stock trends, camp, that was my gospel. But yeah, people use them effectively.
Now I have a question for you, Coach.
Yeah.
What do you think about the Euro Kiwi? Because I have to be honest here. If there is one pair that I find extremely hard to read and very tricky, is the Euro Kiwi. Why? Because at the same time that it's pushing to new highs, first of all, let me mention that we got a nice rejection today from the 161.8% extension of the last corrective lower. So I would be very, very careful being long up here. So, this is the first reason why I'm having a look at it. But the second thing that, the thing that actually bothers me here, and that's why I didn't even consider, trading it, is the fact that look at this price action. I mean, this price action, if you didn't know what was happening earlier, if you didn't know that we actually now pushed to a new high, I would definitely view it as corrective anywhere. Very choppy, takes a long time to unfold. Very slow.
Grinding.
And despite breaking to new highs, not doing it in a convincing manner, right?
Well,
so
maybe on a weekly, it's approaching, besides your 1.618, something that's more visible when you look left, if you look on your weekly.
Listen, I have absolutely no problem having a look at it. So let's go to the weekly and have a look at it. So there we go.
Because that is a good point. That is a good point. There's nothing impulsive in any of that action. Okay.
So this is what I had on the weekly. I was expecting that perhaps this would fail lower, but you have to respect the possibility for a push higher. Yeah. But you see, I mean, I don't know.
I don't like the divergence between the two highs, the one made in August or September, and the one we're making now.
So far, a very obvious divergence, right?
Yeah. So at the most, I'm neutral. I'm not chasing this, to be long.
Speaking of the weekly, perhaps there is an alternative interpretation here, and the alternative interpretation could be on the weekly that this was
a triangle. 4. Yeah, and this is 5. Yeah.
This was a triangle
terminal.
That we actually broke some time ago. Yeah, and now we are actually. But even using that interpretation, I wouldn't be chasing it up here. In all honesty, I don't like it. I wouldn't be chasing wrong, of course, but definitely I'm not putting my money on that being on the long side. Now, yeah, I mentioned yesterday about the possible rebound of the USD Swiss. I just want to say that today we're testing the 200 EMA and the 97.50 resistance. So in all honesty, this is a nice rebound so far, but we really need to clear this level to the upside for me to get more enthusiastic, since we didn't cover that pair. I mean, Blake didn't cover that pair before, I think. I just wanted to Stelio, this is a good point in time to tell me if there are any questions we haven't covered, mate.
Steve, first of all, I have some bad news for you. You're getting the lag effect again on the Mac, but only a little bit, so like 2 or 3 seconds. So it's kind of bearable. But I must say, something's wrong in your house. You must move house, okay? Okay, so questions.
I'm on a Wi-Fi, so that's not like extremely surprising, to be honest.
Yeah. Actually, there's our friend Stephen has some comments which I will pass on to you afterwards. Thank you, Stephen. On your MacBook, that is. Okay, you covered some indices. Did you cover the FTSE today? Hello?
Or is it lag?
Oh, it's particularly bad this time.
And this is off his Mac.
Yeah, it's not okay. So it's not his Windows machine. Seriously, I don't get it, because he has the same internet connection as I do, and it's it's fast.
There he is.
Steve. Oh dear Lord. Okay, something's wrong here. Oh, he's he can clearly hear us.
Okay. Well, my guest is Victor is here.
Okay.
If we want to just move ahead, just give me a minute so I could get ready for Victor, and we'll just start the interview a little earlier. I mean, this is live TV, man. We have to be ready for anything that could happen. I mean, we could get news alerts, and you and I are like Huntley and Brinkley when we're on together, Anyway, Victor, thanks for joining us. Oh, there he is.
Okay.
No, I was just being silent for some time, just checking my connection, etc. Speed test doesn't show anything weird or different, so I don't know what to say. I can tell you as a fact that GoToWebinar is now like completely messing up my Windows PC. I mean, the moment I start speaking there, everything stalls. But I'm having to do my MacBook. I don't know. I've spoken to my provider. Everything works perfectly on anything else besides GoToWebinar. So I don't know what to do. In all honesty, I don't. So anyhow, if you can hear me now without any lag, still you can keep on giving me questions and we can go over them.
Yeah, I mean, there was a question about the FTSE. I know you covered some indices. I can't remember.
Yes, I did cover the FTSE.
Dave is asking about palladium.
Oh, sure. Yeah, let's have a look at palladium, and we can also have
we have platinum and copper as well by another friend. So maybe those three, and then we take it to the interview.
Sure. And something we can also have a look, because I wanted to talk about, I forgot about it, about some of the exotics. So palladium, currently testing the 1,000 level. I expect that the chance of a reaction from here is quite high. So obviously buying up here, confluence of the 200 DMA and horizontal resistance area, not a smart idea. So I would be very, very careful up here. So this is one point about palladium. So I mean it looks by far the most bullish of all the metals, but buying it up there makes no sense. Platinum, extremely bearish, got rejected once again from this triangle support as resistance, and as you see, it's trading more or less in the same manner that silver was trading before I said that I expected to make a new low. So I'm going to say the same thing about platinum here. The way I see platinum, it looks like it wants to break lower and, and resume to the downside. So it's as simple as that. I mean, there is nothing in this price action that says, okay, we are about to find the bottom in platinum. I need to see something totally different. Now, before area of resistance, previous support, resistance. Also, I said that if we make it above here, it can even get higher towards 294. But if we fail from here, you can expect a move lower, and that move lower, I expect that the next area of support that it might find is at 247, whatever it is, 246, 244, actually, sorry, 244.60. So copper as well doesn't look that healthy. So I expect it to also resume lower. Now, let's have a look at a few of the exotics, because the vast majority of them are actually at interesting levels. One of them, the USD ruble. This is a textbook triangle. We're very close to resistance. I have an equality target from the first move higher until the end of that triangle that points to 71.17 as a quality target. Just below that, we find the 50% fib from the high that we had like a couple of years ago. When was it? Last year? Summer it was as well. I think that this is a nice area to be looking for at least one more thrust after getting out of this triangle. So I do suspect that the triangle is going to break to the downside to be exact. Now, USD Turkish lira. Many scenarios here. I think there is an appealing reward to risk ratio. If you want to be short for some more consolidation within this range, let me reiterate here. I'm not looking for a reversal in the USD Turkish lira, but I do think that there is a possibility that we're going to spend some time below the high that we had just above 7 before we actually penetrate through and we make it above. So, if we do hold this area, more choppiness like a triangle, perhaps it's going to turn out to be what the USD ruble has created. Or we might even see one more push to lower, lower than this low before resuming to the upside. So I think from a risk reward ratio, hoping for, a little bit more of Turkish lira strength before getting disintegrated once again is something that might work. Now, USD ZAR, I had the confluence of resistances. I made very clear that this is a pennant, and I expected the pennant to break to the upside. My actually target was here at 1540 because we had a confluence of resistances, 127% extension and the 61.8. And since we made it above this, or we look, we seem to be making it above that. I have to say that I also have a confluence of resistances at 1645. So, so far, so good. It still looks quite bullish. It also, we were talking about before that inverted head and shoulders formations are mostly accepted as reversal formations. So this is an example of a head and shoulders formation that acted perfectly as a reversal formation. And USD ZAR, let me zoom out further.
Yeah, we've lost you again, Steve.
Well, it's interview time now. Anyway.
Yep. Okay.
Yeah, go ahead. Tell you're one of the CEOs.
No, let's go ahead with the
You can see
interview.
here, it.
Yeah, Steve, that was a big one.
I'm
like
here,
the ones on your that was a big one, like on your PC. So we have to address this problem. Okay, let's get on with the interview, and then I'll have a chat to Steve and see what we can do.
Okay, thank you guys.
Okay.
All right, hi Victor.
Yeah.
Thank you for coming back for the third time. You know I like the number 3. So I'm making you the presenter. Look forward to hearing your voice again, buddy. And I know you prepared something with us with some people that were market masters in the 30s and 50s, and looking forward to talking to you. It's been a while.
Yeah, Dale, it's been about almost a year since the last interview.
Oh, time flies while you're trying to pick a top in the S&P.
Oh, I know. And, you picked a really good intro because the number 3, we're going to be talking about the law of 3 and the law of 7.
Oh, great.
The law of vibration.
Oh, beautiful. Yeah, I read your what you wrote on Twitter about what you were going to cover. And, I appreciate when people put some time and preparation into bringing, great educational content. And I've been saying this is a don't miss it. So you know what I'm going to do, what I normally don't do? Mm-hmm. I'm going to shut up and I'm going to let you talk and learn.
Well, let me, before I get started with that, I'm going to be using screenshots of images that I posted last night on Twitter. So if I go to this screen here, do you see this screen right here? Okay, let me try something. This is the Apple daily chart, which I'll go over with you at the end. I kind of have a loose agenda, but it's been intriguing for me because I discovered it. I mean, I discovered this challenge or this journey probably a month ago when I was looking into what Gann really meant by the term law of vibration, which he uses in a ticker interview with Weitzkopf back in 1909, I believe. It's called the famous ticker interview. You can look it up. Anybody can go on Google and look it up. Just Google the Gann Weitzkopf ticker interview.
Is it audio only?
It's just they're quotes and reprints of.
Oh, I see. Okay, so it's written.
Of the summary.
Okay.
It's not a video. It's
I mean 1909 they didn't. They didn't even have. Okay.
All right. So what I'm going to do is I'm going to give you the reason I put these images together to show you is because one step led to another along this journey, and it ended up that what I would call theoretical or hypothetical scientific thoughts and ideas actually led to another step, which I'm now going to, at the very end, use this Apple chart as an example. I'm going to use one other chart as well of the ESs on how I interpret what Gann was trying to tell us when he talks about the law of vibration in his book, The Tunnel Through the Air. So let me go to this other screen here.
Okay.
Can go down here. Show you in a minute. Sorry. Give me 1 second.
Okay. Take your time.
Yeah. Okay, here we go. I'm going to put the cover of the book on the screen for you. There you go.
Wow, airplanes falling out of the sky.
Right, airplanes falling out of the sky. It almost looks like when you read the book. When I first got this book, and I read it the first time around, I thought this is junk. This is nothing but a romance novel melded into a sci-fi novel, because there's a sci-fi fiction type of theme going through it, and I'm going, this ain't gonna work for me. It's not going to give me any additional trading technique information that I could really use. But in this book, the book is coded, and Gann even says in the introduction that he suggests that you read this book 3 times. The number 3 comes up again, just like you mentioned in the opening. And then he says you'll begin to see things that you hadn't seen before in the book. And so what I'm going to do is read a portion of the book in chapter 7, on page 77 of chapter 7. It's the only time that Gann mentions the law of vibration in the book, The Tunnel Through the Air. And I'm going to read you this part because this part, I think, is a big clue. He says that in making my calculations on the stock market or any future event, I get the past history and find out what cycle we are in and then predict the curve for the future, which is a repetition of past market movements. And here's where he says the next sentence is, the great law of vibration is based on like producing like. Like causes produce like effects. And he goes on to mention the wireless telegraph, the phonograph, and the radio. So he was into, at that point in time, cycles. And this is, I think, a clue to what he's talking about in the law of vibration. Now, there's another book that came out by Tony Plummer. It's called The Law of Vibration, where he has the subtitle of the book, The Revelation of William D. Gann. And here he talks about the linkage between the wording, the law of vibration, the law of 3, the law of 7. He brings up the fact that Gurdjieff, the Armenian Russian mystic in the early 1900s, also wrote books that were coded. And he brings those two guys together. And one of the better books that I've read on the Gurdjieff link and Gann is the following, and I'll go to that right now. Just give me a second.
So these are universal laws that he discovered to apply to the markets.
I think so. I think he discovered that if you know that the cycles work in all time frames and in all instances throughout the universe, then you will have a key to an understanding of how the markets move from point A to point B, from pivot high to pivot lows. Okay. And let me just get this going here.
And you also mentioned another guy, Stephen. It starts with a P. Huh?
Yeah, yeah, Stephen. His name is pretty funny to pronounce because if you first look at it, it looks like you should say the name is P-U-E-T-Z, Putz, but I think he probably goes by Pites or some other variation. Now, I posted a video he did on YouTube last night, and you can look at my Twitter feed, and he's interviewed for about 50 minutes. And he talks about his theory about the unified cycle theory, which it's an amazing book. It's over 450 pages long, which I'll go to.
Wow.
And he talks about cycles as long as billions of years to as short as 28 days. That's what caught my eye. But he mentions that the cycles have a habit of putting together linkages in groups of 3. Here's your number 3 again. That's why I wanted to bring that up to you.
Huh.
Here's the book.
There are a lot of, popular things, the third time's a charm or the third planet from the sun.
Right.
You know what I mean? The hat trick is 3 goals. There are a lot of 3s out there, even, the Trinity. Mm-hmm. So I just by, accident came to believe it was a number of completion.
Well, the number of completion could be 9 and it could be 0. Also, the number in numerology, in numerology, the number 9 not only is the number of completion, but it's the number of initiation, which I'm going to show you next. Okay. Because I think it's very interesting that what this guy Tony Plummer did, he linked the Gann emblem, which is the circle and the square and the triangle all in one setting, with the Enneagram, which also is a moving object image that is constantly changing. And I'm going to show you that image right now.
Okay.
Yeah, let me find it here. Coming up to it. Okay, here we go. This is a great portrait of the Enneagram, which is spelled Enneagram, and it's from a book that Christian Wertenbacher wrote. And if anybody's interested in more about discovering how Gurdjieff actually coded this image into his works, this is the book to get. If you notice, Dale, there's a 9 at the very top. See that there?
Right. Yes.
You see my little finger there? Okay.
Yeah.
That is the number that is linked with the sacred triangle 3, 6, and 9. I gotta get back down here. Okay, 3, 6, and 9. In this example, the way the movement of these numbers is goes is that it's not actually moves from 1, then the 2, then the 3, then the 4, then the 5, then the 6, and so on until you get to 9, and then you start over. Actually, the number starts like this. It starts with a 1 here. It drops to 4. It doesn't go to 2 next. It drops from 1 to 4, then from 4 to 2, then from 2 to 8, and then from 8 to 5, and then from 5 to 7, and then finally the last link is 7 to 1, and then the whole cycle repeats. Now, according to Tony Plummer, this is the secret to the markets, because what he did next is the following, and you're going to see why. So I'm going to jump ahead here and go to this. This actually is another image of the same thing we just talked about. If we start at 1, we go to 4, then we go to 2, then we go to 8, then we go to 5. I'm sorry, 5 is right. 5 is right there. I've cut it off. Then we go to 7, and then we finally go back up to 1, and the cycle starts over again. You notice the 1 and the 8 is in the position of like a double top, and you can draw a horizontal line across here. And there's a reason for it. So what Tony Plummer says is, if you take this diagram and convert it into something that looks like this, and you have a creative shock here, this is where wave 1, let's say you're talking about Elliott wave. Wave 1 is would start here, correct? So there's something that happened here that created the initial impulse. So what he does, he believes that cycles don't work in the way Elliott would say it would be, the 1, 2, 3, 4, 5 up, and then A, B, C down, and then the recycles. He says you want to look at 1, 2, 3 up, and A, B, C down.
Interesting.
If you remember what we did, we went from
Elliottian would say that's all corrective.
That's right.
Okay.
But what I remember, and I can't remember the author's name, there's a book at the Cleveland Public Library by some Forex author where he also claimed the same thing. Don't think about analyzing your market in terms of Elliott wave procedures, but that the markets move in a 1, 2, 3 up pattern, and then it corrects in a 1, 2, 3 down pattern. And if you think about it, this 1 is this right here is
the shock.
This right here, here.
Passive shock.
Yeah, it's the initiation stage. It's the initial 1. It's a new high, and then the correction phase is the correction phase would be starting here, 8, 5, 7, and then back to 1. But basically, you want to be aware of this pattern right here, which is what Plummer's theory is based on. And I wanted to mention something too, because I'm going to cover an interesting aspect of W.D. Gann and his secret book that he wrote called The Ancient Science of Secret Science of Numbers. And he used an alias. He used the name of Luo Clement. Luo is the first name. And that always bothered me because I thought, why would someone bother to go to that extent and not just spell his first name as L-O-U for Lou? And there's a reason for it. And I'll go over that with you. But the main reason for it I will go over is also based on the fact that the numbers that are linked in numerology called triads, they work together, and it's a way to base whether your birth value and your first name value are on the same path. And if they are, then you're in a good spot. So the numbers 3, 6, 9. That's the golden triangle.
Yes.
And that's one of the paths. The other path is 1, 5, and 7. 1, 5, and 7. And the other path is 2, 4, and 8. So those are the three paths that Gann talks about in his book. And I'll get you that screenshot in 1 second here.
Okay.
Right here. I cut his name off, but the name on the author's name is Luo, L-U-O, and the last name is Clement, C-L-E-M-E-N-T. And he wrote this book in 1908. Interesting that Gann would play around with your head, because the Tunnel Through the Air has 36 chapters, or 360 degrees, the circle. In this book, The Ancient Science of Numbers, there are 9 chapters, because there are only 9 numbers, 1 through 9, and then it starts over again. In numerology, that's what you do. You reduce your larger number into one of the numbers between 1 and 9. And so what he did in this book, he talks about how to apply the number calculations based on your birth, the day in the month of the month you were born, which gives you the birth value, and then you take your first name and you compute the value, total value, and reduce it to a number. And if they both agree and they both fall on one of the paths, you're in a good spot. If you have birth value that does not fall in the same path as your name value, you've got a problem. And so I looked up mine. And for me, my first name, Victor, is on a path of 5. And when I looked at my birth value, which is the 28th of July, so 28 reduces to the number 10, and then 10 reduces to the number 1. I had a problem because I wasn't on the same life path. I mean, I wasn't on the same path. But I remember this because this is very interesting. In this book, Gann says, if you have a problem and you want to have the birth value and the name value agreed and they're on the same path, you may want to change your name. And if you can't change your name, you may want to start using a nickname, and you may want to ingrain that in your head by talking about it, twice a day, and then even get your friends to talk to you as in your nickname. So I remember when I was working at a record store in Chicago, and my manager was a boisterous Armenian guy who knew everything about classical singers. You might like this, classical vocalists.
Okay.
And one day, when I would answer the phone, I would, if I didn't want people to know my real name, I would say my name was Zoltan, Zoltan. And one day I took the day off, and my manager answered the phone, and the guy was somebody was asking for, can I talk to Zoltan? And of course, my manager didn't know who that was. So he says, sorry, Zoltan's not here today. He's in Paris, France, signing the Treaty of Versailles. But when I did my nickname, Zoltan, and did the path, it worked out. It was a number 7. So I had a 157. And so I should start using Zoltan as my nickname again. Maybe I'll have a better trading result. But that gives you an idea of how far Gann would go to talk about these concepts. Also, if my friend, student who goes by the nickname of Zuko was listening, Zuko, his name path equals 1. The other thing that Gann did is he talked about cycles in this book, and I'm not going to get into that right now because I want to get to the other parts in this presentation. So,
okay, buddy.
So what does all this mean in terms of my use of the concept? Well, what I started doing is I started trying to figure out a way I could predict where pivot points would occur using a method that incorporates the law of 3 and the law of 7 and what I now call the VZ key of 1 through 10 numbers. So I might have a VZ1, VZ key of 1, 2, 4, 5, 6, 8, 9, and 10. And then actually, if you go above 10, the methodology does not work very well. But I'm going to go over these charts with you first. But before I do that, the reason I think that Gann picked out the name LUO based on his theory in the book he actually wrote is because if you take the name LUO, you get a name value of 3. And remember, you opened up with the words 3 this morning.
Right. Huh.
Okay. Now what I did is I said, okay, I'm going to take Gann's first name, but Gann used initials. He uses W and D. So when I take W and D and pretend that's a name, first name, I get a name value of 9. So we already have 3 and we have a 9. And Gann's birth date was on June 6th. So what I think Gann was doing is he sat down and figured out, okay, I want to represent the golden, the golden triangle, 369. And that's why if he has a birth value of 6 and he has a name value of 9, LUO has a name value of 3. He has now completed the triangle.
Huh. Wow.
And that's what when I did that part of the summary, I said, this guy is pretty clever. So
did he have a long, fulfilling, happy, prosperous life after he made all these adjustments?
You know what? A lot of people say he did, but actually his son near the end of Gann's life said he didn't, and that he died basically not with very much money in his bank account. So that's something to think about.
Yeah, they say that about R.N. Elliott too, that he died broke.
Yeah, he died broke too. By the way, did you know that my birthday, July 28th, is the same as Elliott's?
Wow. Yeah.
So I you never know what happened, what transpired with the family history and finances over time, because there's so many things that people claim that they did or didn't do.
Does our president need to make some changes on his first name, or the Donald? Maybe that's why he went with the Donald.
Well, maybe. You know what? I'll have to check into that for you. Yeah.
All right, buddy.
But here's before we go further on here, I found a guy who has written a book, and his name is Eric Pennica. It's right here. It's called Gann Science, the Periodic Table, and the Law of Vibration. It's published by that company called the Secret Science Institute in LA. And I've talked to the guy because I bought one of his books called Wheels Within Wheels by Louis Ferrara. I spent $500 on the book. So this particular book is selling for $4,500, but here's a partial contents of it. So when I looked at it, I wanted to see if he had anything to show that, I was on the right path. And here we go. We got harmonic resonance. There's an author named Keeley, 369. Keeley's thirds and octaves. By the way, octaves and musicians make great traders because they are operating under the octave law of 7. Lowell Clements, here's chapter 13 where he says, what's in a name? I don't know, he may have discovered the same thing I did right there. But let's go on further here. So see if I haven't missed anything. Okay, there's one interesting thing, one more thing about the tunnel through the air. I noticed this on my own, but Olga Morales, who's written a book called on GAN and the number 7, mentions the same thing. I discovered this independently. I didn't know if anybody else did, but in Gan's book, The Tunnel Through the Air, let me just get a drink of water here. Where chapter 34 should be, if you look at the way the Roman numerals are sitting here for chapter 34, it looks like a misprint, right? It looks like
39.
Okay. Yeah. That was done on purpose because Robert Gordon, who is the main character in the book, the title of the chapter is 7 Days. So there's a reference to 7. And what Gann did cleverly, and Tony Flemmer points this out in his book, Law of Vibration, he wanted to point out that in this page 1 of this chapter, 34, if you take the numbers 34 and you reduce them to 7, you have that aspect. And if you take the misprint of 39, that reduces to 12, and then 12 reduces to 3. So in this particular page, Gann was introducing you to the two concepts of law of 3 and the law of 7. I just wanted to point that out. Okay. It's not a mistake.
All
okay. Right. So let's go. Now let's see what all this means to the traders out there, because we know how to compute price targets. I do that all day long using a Gann method for price. But I wanted to see if I could figure out a way to compute time targets based on, pivot highs and pivot lows using my method that I mentioned before, the law of 3, the law of 7, and the VZ key of 1, 2, 4, 5, 6, 8, 9, and 10. And so let's just go over this right now. I'm going to give you an older chart here. Okay, here we go. This is a chart of the ESs, and I set some Gann angles all the way back to the February low of this year.
Okay.
This line here, no, you can't read it right here because it's very faint, but it is the 45-degree angle 1-by-1 line, the famous 1-by-1. So what Gann would say is anything trading below the 1-by-1 is in a weakened position, and if you're a bull, and if it's trading above the 1-by-1, it's in a very strong position if you're a bull. So what we see here is, since right here there was an attempt to move above the 1-by-1 and it failed, and Gann would always say, look for market reactions or penetrations through the angles. So here was a rejection.
Yeah.
Here's another lower Gann angle, and here was support. Here was support again. So right now, this is what you'd call the 2-by-1. And the 2-by-1 angle is the next major angle below the 1-by-1. And so we're in a market that's in between the 1-by-1 and the 2-by-1, which to me is pretty bullish. it's not the ideal setting. The other thing is, if you notice, I left some astro trading lines on here. The Saturn line was 2792. And that you convert longitude of the planet on a 360-degree zodiac wheel.
Yeah, we got there yesterday, I think 88.
Mm-hmm. And so you see here was a pivot low that hit right on the Saturn line. But while I was paying attention to the Neptune line, I cut this off here. This is the Neptune line here. And you see the market reacted right here and dropped back down, tried it again, and went through it. Normally, when you have the market moving above these lines or below them, you have a good trading opportunity. Okay. Now, the other thing that I wanted to mention, and this is where I bring all of this that I spent 20 minutes on just now talking about, is how did I apply, and I'm still trying to work out the kinks in it, is how can I use the Gann's law of vibration theory, the way I use it, to predict market target dates based on trading days, not calendar days. So here's an example. Off the June 28th low, which is right here, the law of 3 time target projection that I had made out ahead of time was 28.4 trading days, 28.4. The actual pivot top was 27 trading days on August 7th. I found out that the method is accurate with +1 or minus on a daily chart. It's less accurate on a weekly chart. Excuse me. It's off by as many as 2 days on a weekly chart, 2 or 3 days. So I'm sticking with a daily chart for these projections when I do them. So I'm constantly doing projections off of these, and you can do them off a pivot low, and you can do them off a pivot high as well. I could probably do one from here. If I did one from here to get to this, which I can do later on in the day and post it, you'll see what I mean. So you can do them off pivot lows and you can do them off pivot highs. So let's go next. The next chart is the Apple chart.
Yeah.
And the Apple chart, there's a June 25 pivot low, which I used because that's a major low here. You can't see the rest of the left-hand side, but this is a major low. Okay. And I installed the 1x1, and this is a little off. This should be come down to here, so I can fix that.
So we're at an inflection point here or an acceleration point.
Yes, we are. That's a good observation. We are. We're at the 2x1. This is the 2x1. This is the 1x1. But if you notice, this period between here and here, all of this here, did a lot of damage, because usually if you're in a healthy up market, the bars should follow your 1x1.
Right. But
because of all of this sideways retracement action, there's a correction here actually. Like it weakened the Apple trading bars. So notice here it hit the 1x1, 2x1, excuse me, right here and here, and rejected. That was another reason. But here we are again. We're back to the 2x1 right now. So it's a good point to look and see what happens. I took see where my notes are here. I took the method and I tried to project time targets again using this pivot here and this pivot here and this pivot here. And now I put my book aside, so I don't know what I did with my notes. But I'll have to post the results later on. So It's interesting that I'm thinking that if I use Gann angles and I use this other method, the VZ law of 3 and 7 and VZ key of 1 and so on method, I will be able to get more accurate projections based on where the markets are inflecting, right here to right here, and then we're up to here again. So I wanted to point that out because that's my latest thing, because I think Spencer, who goes by Spinman, and he goes by Spencer now on Twitter, he's one of my first students.
Right. Yeah.
He wanted to know if I had anything interesting at VZ Labs to come out with today. Well, Spencer, I did. It was this whole idea of trying to use a method that's not being widely used to project pivot highs to pivot lows with consistency. So it's a work in progress, and that's what I wanted to mention to you. In terms of other conversations I've had with people and traders and students, is the market rigged? Is the market a big black box now, where technical analysis you can throw it in the garbage can? I don't know how you feel about that.
I don't think so.
Okay. Well, I don't think so either.
I still see things that work.
Yeah, I do too. I still see things that work, but I can tell you one thing that miserably failed is I had a method which is like the Bradley indicator.
Oh yeah.
And Bradley uses a series of planets, and he computes the declinations, and then he plots them and puts them on a chart. And if you look at a Bradley right now, the Bradley indicator was predicting a huge drop at the end of July and beginning of August, and going into a kind of a huge correction into November. But that hasn't panned out yet.
Yeah.
Now I created a method called VZ-VMEMA, which is a shorthand for VZ-MEVEMA. As the shorthand for the three planets, Mercury, Venus, and Mars. And I took the declinations of those planets as a short version of a Bradley, because I didn't have time to work out the Bradley stuff every day. And it failed miserably. It failed in January, and it failed in July. So I just wanted to mention that to you, because usually when I see that happening, because the VZ-VMEMA method to predict tops and bottoms was about 80% accurate going back to 1987.
And then all of a sudden
it didn't work, but Bradley didn't work either. So just so you know, I don't just
not everything works all of the time. And you know, there's different rhythms. You're talking about it. Certain things may work better depending upon the vibration we're in.
And the other thing, and what you bring up is very good, because two things. There's what they call inversions, where your cycle actually doesn't top out, but actually keeps going. And if you remember the big solar eclipse from last year on my son's birthday, August 21.
Yeah.
Well, I tracked that because I remember reading in a book by Larry Pesavento. You know Larry, you probably interviewed Larry. He's got 3 excellent books on astro trading, and one of his books and where he talks about eclipses, he says, "Be careful." Excuse me. He says, "Be careful if you're in a market top and you have an eclipse pattern, and the market doesn't drop. It's a good indicator the market's going to go much higher." And that's exactly what happened from last August to now.
Right.
So you're absolutely right. Keep your as Gann would say, use all your tools all the time, but just remember, all your tools are not 100% predictive.
Right. And if you don't learn how to change your mind, you won't have any change left. So obviously a man who puts out a statement like that was flexible enough to, as new information came in, and this is constantly a reassessing as new data and price action comes in, for you to be able to adjust to it and change your mind.
You're right. And you know what? I'm going to give you a personal story now. And I'm sure you like these, because you may even have known about him or knew him. He was a trader on the S&P minis, and he also traded, I think, in the IBM options. I'm not talking about Norman Winsky now, because I know Norman. He used to be part of one of my members of my old Yahoo group called Gann's Ghost. But this guy was Edward Toppel, Toppel.
Yeah, I don't know.
He lived on the North Shore in Chicago. Where I met him was I had started a Sherlock Holmes club in Chicago called the Criterion Bar Association. And when people see the card, they go, "What are you, a law firm?" I go, "No, this is where Sherlock Holmes is notified that there's a Dr. Watson that is looking for a roommate, and so he meets his friend Stanford at a restaurant which I've been to in London in the financial district. It's called the Criterion Bar, and they're only open for lunch and dinner. So that's where the name of the group came from. But basically, Edward was one of our members, and I didn't know at the time because I wasn't into trading yet that he was, a trader on the S&Ps. But he wrote an excellent book. He passed away a few years ago, unfortunately. He wrote a book called Zen in the Markets, where he talks about what we just covered, that if you get too predictive and you think you're 100% right, the market will chew you up and grind you out and throw you in the garbage can. And that was his major point in the book, that you learn to go with the flow, use your indicators, but the market has the ultimate rule over you. And if you don't accept that, then you're not going to be around for a while.
Stay humble or be humbled.
Right. Stay humble. So I'm going to ask you quickly, because I haven't talked to you for a while. What do you think the market's going to do? Because we have a cycle pattern that's due to top out here, but it's not topping yet. And other people say, well, it's going to go even higher. But I think the markets are extended, and we're due for a reversal. And if you look at Tom DeMark,
he's
sequential patterns, they had the pattern bar 13 on a weekly daily chart actually hit last week. But I've also noticed in the past when I was using DeMark 13s that if the market went above your 13 predicted market top bar, it usually means much higher prices ahead. So just give you a warning.
Okay, so I'm looking for a shakeout in the market, and then new all-time highs next year. But I do think that there's potential for a shakeout into the midterms. Right. And the other thing I wanted to mention for those people, I didn't post Forex charts, and I want to do that next time maybe. What's the best way for people to get a hold of you, Victor? Because a lot of people have a hard time finding teachers with the kind of knowledge that you have. It doesn't take that much to teach a 3-drive with RSI filters and fibs and everything, but you've had a lifetime of studying these masters and trying to come up with your own edge with what you've learned. Is Twitter the best way for them to reach you at Victor Zubarov? Yes, they can either direct message me on Twitter at my handle is at Victor Zubarov. It's my first and last name strung together. Okay. Zubarev. Or they can send me an email at Victor, all lowercase letters, Victor Zubarov at yahoo.com. All right. So all I'm going to ask from you, Victor, is if I need to change my first name from Dale to DJ or something like that. Well, the only thing I need for me to get you that information, did you ever have a nickname? Yeah. They weren't flattering. Anyway, but it has something to do with pink. All right, people would make fun of my last name. What I need is I just need your the day in the month you were born. I don't need them. I don't even need the month. I just need the date. 5/27. Okay. All right. I will get back to you because I can do that in a few minutes. Thank you so much, buddy, for coming back on. It's a pleasure. Your third appearance, and I'm so glad you talked about. I learned that 3 is not the number of completion, 9 is. So that means we have at least 6 more interviews together. And as a 3 Dog Night would say, 1 is the loneliness number. All right, my trading warrior brother. Okay, thank you, Victor. Thank you, Dale. Everyone, thank Victor Zubarov, and follow him on Twitter. And if you want to learn this type of work, you can't find a better guy than Victor. So
Thank you,
that's a
Dale.
wrap for us, everybody. The Nifty reverse. EG was a decent call today, guys, don't you think? So that was one of them. Where is it here? Yeah, Blake and I were talking about it during the session. Pretty nice break here. And EG, right? So it was on this candle. I booked it in case we get, 1, 2, and another shot up. I don't know what the Aussie did, but it probably popped off that 3 drive. No trip to Hollywood. But yeah, the 3 drive, we're getting some upside here. And the S&Ps are trying to hold. But you look at the 4-hour of the S&Ps and we're still back underneath the throwover as we are in the Dow. And actually the NASDAQ is a relative weakness today, guys, down 0.5% compared to, which is different than last week when I was away and it was grinding me. So we'll see everyone tomorrow. Thank you, everyone. Remember, don't forget to join ForexAnalytix. And most of all, don't just count your pips, count your blessings. See you at Paulie's European crossover tomorrow morning. And if you're not happy with your broker, don't forget to get a hold of Trent or Justin at Forest Park FX. See you, everyone, tomorrow. Enjoy the rest of your day. If you're not a member, you can join and go see what Blake is up to. See if he covered his EG. That was a great call. And what Steve is up to, and Stelios, and the 90 other guys and ladies in there, including Amanda, what they're thinking of this dollar weakness that came into the market during the interview. That's a wrap for me. I'll see everyone tomorrow. Good hunting. Adios, and thank you, Victor.